What's up everyone? Thank you so much for tuning in. And if you are new, welcome to my channel. Here I try to cover topics that are of interest to you on real estate and mortgages. So please make sure to like, share and tap that bell icon so you get notified anytime I share an informative video. And of course, if you find the information provided is of value, then all I ask is to hit the tiny little subscription button to get me motivated to keep you up to date with everything real estate. Hi, my name is Preeti and I am both a real estate broker and a mortgage broker for close to 20 years. Today, I'm here to talk about RRSPs. Last week, we discussed the basics of an RRSP account. What's the purpose of that account? How to qualify to open an RRSP account? And also some pros and cons on this RRSP account. Now, I will always advise you to talk to a banker before opening an RRSP account to understand exactly how you will earn the interest in that account. It all boils down to the level of risk you are willing to take. Because remember, in an RRSP account, money that is earned is tax-free. Money lost is your loss. So be careful when setting up the account. I also briefly touched on the disadvantages of this account. So please listen to that video before proceeding to this one. And while you are there, press that like button too, just because. Now, when it comes to RRSPs, lots of people have mixed feelings. And none of them are wrong, really. To a lot of self-employed people, RRSP seems like a waste of an investment, whereas to many salaried employees, it's just another way to save. So let's break it down and start with the salaried employees. As you are already aware, for the year 2022, 18% of your income up to a total of $29,210 can be deposited into your RRSP account. Now, if you are working for a company that does not care about your RRSP contributions, then you're on your own, and the company will not help you contribute towards your own plan. But let's say you work for a company that says, okay, we will match your RRSP contribution. And that is usually between 3% and 5% of an employee's pre-tax salary. This percentage will vary depending on the company size, industry, and other compensation factors. But over time, even small matching programs can really add up for employees. So just for easy math, okay, because I'm very bad at math, so let's make it easy. Let's say the company is contributing equally. So if you invest $100 per paycheck into your RRSP, the company will also contribute the same. So technically, $200 is going into your RRSP per paycheck. But there's a caveat. If you leave the company, then you may not have access to their portion of the contribution. Some companies insist that you have to be employed for a minimum of 2 or maybe 5 years in order to avail the company's portion of the RRSP. Always read your contract carefully if you opt in for this equal contribution scheme. Secondly, if you are a first-time home buyer and you are like, cool, I have $35,000 in my RRSP, but $17,500 was contributed by the company for your retirement, not for your first-time home buying. So basically, you can only avail your portion of the contribution, which is around $17,500. But if your portion is $35,000, then yes, by all means, you take it out under the home buyer's plan. Again, all companies have different policies when it comes to their contribution towards your RRSP. If you're extremely lucky, or if you negotiate at the very beginning, then hey, anything is possible, but within the guidelines. Next, we talk about a spousal RRSP. This allows you to contribute money to your spouse or common law partner's RRSP plan up to your personal contribution limit. When a contribution is made to a spousal RRSP, the contributor receives a tax deduction. This can help balance your income as a couple and works best when a large disparity exists between you and your spouse's income. By contributing to a spousal RRSP, the higher earner spouse receives a tax deduction that could lower their personal tax bill for that particular year. On the other hand, the lower earning spouse would get taxed at a lower margin tax rate when the money is withdrawn from the spousal RRSP. This means potentially paying less tax on your spousal RRSP assets at retirement. Talk to your accountant or your financial advisor before making this move. Now let's talk about the self-employed people. Honestly, a lot of self-employed people do not contribute towards the RRSP, even though they should. Because with the tax breaks we get and the income disparity between what we earn and what we declare can be. So, when it comes time to retire, the money we get from the old age pension might be pretty sad, but that's when the RRSP comes handy. But the thing with self-employed people, and I am one of them, is we work on sales and commission. So unlike the salaried employees, we don't have a steady paycheck coming in every 2 weeks. So we'd rather hold on to our funds rather than locking it into something that we cannot take out. And that can cause us a lot of grief in the future. especially if we are not well planned. So, my self-employed friends, look into contributing towards your RRSP. Trust me, it will come handy. Now, unlike the annual year end, RRSP contribution deadlines do not follow the traditional January to December calendar year. The deadline for contribution to an RRSP for the previous year is always 60 days after the end of the last year. That is why every year from Jan 1st to March 1st, you will hear the banks scream, RRSP season, come on people, put your money in. Basically to encourage those contributors who do not put money on a monthly basis, but prefer doing a lump sum towards the end of Feb or the deadline date, which is March 1st. Always be aware of your RRSP limit because you do not want to exceed that limit. Now, they say that first-time offenders, they give you a $2,000 wiggle room, but it's CRA. They can wiggle that room away from you anytime. But let's say that you overcontributed. Then they will charge you a 1% penalty fee for every month that excess money sits in your account. And that will stop once you pay 1% penalty and complete the appropriate forms. Your overcontribution then rolls into the next year's deduction limit. Be careful to include that when calculating your deduction limit for the following tax year. You don't want to overcontribute 2 years in a row. Now let's say you are retired and you are 70 years old and you still have a lot of money left in your RRSP. You are approaching the age of 71. The rule says that an RRSP must mature by December 31st of the year in which you turn 71. On maturity, the funds must be withdrawn or transferred into an RRIF, which is a RIF. It's a registered retirement income fund, another whole other ballgame. Or used to purchase an annuity, which is an insurance product. Again, whole other scenario. Now, the reason behind this is because once you turn 71, you will not be able to make any further contributions into your individual RRSP. So you will have these options, but there is still a lot more where RRSPs are concerned. And I would always advise you to speak to your banker, your financial advisor, or your accountant for very complicated scenarios. The not so complicated ones, you can call me. And if I feel I cannot help you, I will guide you to the right person who can. So, to sum it up, advantages. Investments grow tax-free. 2. Reduces your taxable income. 3. You can borrow funds against the RRSP for a first-time home buyer. And 4. RRSP are protected from creditors. Disadvantages. 1. Withdrawals are taxed. 2. The withdrawals cannot be added back to your contribution room. Number 3. Contribution is based on your income. And 4. You must close your RRSP at the age of 71. So, if you found value and liked this video and would want to see more content, click on the boxes on the screen. Once again, my name is Preeti Rao and my contact information is in the description box below. Make sure to hit like, share, subscribe and the bell icon so you don't miss any future videos. Thank you so much for watching and don't forget to call me because I hold the key that opens the door to your dream home.